Good day, ladies and gentlemen, and welcome to the Q2 FY23 earnings conference call of PCBL Limited, hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanjesh Jain from ICICI Securities. Thank you, and over to you, sir.
Thanks, Michelle. Good afternoon, everyone. Thank you for joining on PCBL Limited Q2 FY23 results conference call. We have PCBL management on the call, represented by Mr. Raj Gupta, CFO, Mr. B.L. Chandak, Executive Director, Mr. Saket Shah, Head Investor Relationships, Mr. Pankaj Kedia, Vice President, Investor Relations. I would like to invite Mr. Chandak ji to initiate the call with his opening remark, post which we will have a Q&A session. Over to you, sir. Thank you.
Thank you, Sanjay. Good afternoon, ladies and gentlemen. Thank you for taking time to join us for the call. Our results were announced today, and I hope you have been able to see through. We'll start with the highlights of our performance in second quarter. The continuing stress in the global geopolitical situation, rapidly changing economic environment, and lack of firm direction in the stance of policymakers has turned the business environment extremely uncertain. Usually the short-term visibility around business is higher. This time it is just the opposite. While we are very confident of long-term prospects and opportunities for our business, opaqueness around next few quarters is higher. Despite all such adversities, we could keep our focus firm and navigate the headwinds well, and therefore we could deliver a decent set of numbers which reflects the resilience of the company. We are hopeful with our continuing focus on critical business parameters like yield improvement, productivity, capacity expansion, and improving R&D bandwidth. We should be able to do much better even going forward. PCBL reported sales volume of 113,859 metric tons during the quarter. This was backed by domestic sales volume of 77,963 metric tons and international sales volume of 35,896 metric tons. If we look at segment-wide sales, tire accounted for 82,633 metric tons. Performance Chemical reported 21,210 metric tons, and specialty black sales was 10,016 metric tons. For the first time, we crossed specialty black volume of 10,000 plus in the quarter. Our revenue increased year on year from 1,068 crore to 1,628 crore in Q2 FY23. EBITDA marginally increased to 187 crore year on year. EBITDA per ton stood at 16,421 rupees per ton. Profit after tax stood at 116 crore during the quarter. Power generation increased from 133 million units in quarter 1 FY22 to 156 million units during the quarter, with external sales volume of 95 million units, against sale of 77 million units in quarter 2 in previous year. With rising demand for power in the country and consequent increase in power tariffs, PCBL's average realization sharply increased to ₹3.97 per kilowatt of unit on year. Additionally, CPP capacity of 7 megawatt in Cochin is in final stage of commissioning, and we expect that will also give us good volume. Despite steep increase in crude prices, EBITDA per metric ton has improved on back of supply shortages and improved performance from power and specialty blend. Now let me give you current market scenario and outlook. In the domestic market, demand is growing with improvement in auto sales, easing of supply chain issues, and improving economic activity. We expect higher demand to remain healthy even going forward on the back of recovery in OEM sales across all segments and the replacement demand. The Indian tire and auto industry from mid-term point of view looks encouraging. However, increasing capacities of carbon black may have some pressure in the short run on margins. Export demand, which was seeing a strong momentum for last few quarters, has tapered down primarily due to disruption in global market, particularly relevant for exports to Europe. However, with continuing consolidation in carbon black industry in China and prevailing political issues, the supply side challenges in the industry are likely to continue in the foreseeable future. Global headwinds in exports, therefore, may be in temporary nature. Geopolitical scenario remains extremely volatile and massive fluctuations in oil prices and exchange rates remain there. We remain watchful on these parameters. Now let me also give a status update on expansion plan. The greenfield project of ours in PCBL Tamil Nadu is progressing satisfactorily and we expect commissioning starting from end December 22. Additional brownfield expansion of specialty lines with capacity of 2 lines with capacity of 20,000 metric ton of each line is happening over this financial year and next financial year. First phase of brownfield expansion of specialty line at Mundra is underway and expected to get completed by March 23. At present, the company has 72,000 metric ton capacity, and with this increased brownfield expansion, capacity will increase to 1,12,000 metric ton. Our current power capacity is 91 megawatt. Another 7 megawatt in Kochi is under commissioning phase. This would take our capacity to 98 megawatt, and once Chennai project starts, then we will have another 24 megawatt waste heat recovery power plant. So in summation, these are some of the important facts on expansion or say business outlook and current performance. Now we can open the floor for question answer, and my colleagues Raj Gupta and Pankaj Kedia are also there, so we can take all the questions.
Thank you.
Over to you, Sanjay.
Thank you, sir. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Khetan from Smiths Limited. Please go ahead. Mr. Khetan, I have unmuted your line. Kindly proceed with your question. As the participant is on a mute mode, we'll move to the next question, which is from the line of Mr. Sanjesh Jain from ICICI Securities. Please proceed.
Yeah, good afternoon, sir. Thanks for taking my question. Three from my side. Ash, when you talk about the challenges in the European market or the export market volume, can you help us understand what are the challenges are we looking at it? It is the slowdown in the demand or rising supply from China, or what is the actual problem in the export market? Can you elaborate on that? That's the first question. Second, related to domestic demand, uh, the rubber prices have eased from the peak and the auto sales have gained the momentum. But we are yet to see the revival in the domestic volumes of the carbon black for Philips Carbon PCBL. Can you help us understand the volume demand outlook for the domestic market? These are my first two questions. Thank you.
Sanjay, uh, regarding your question about the outlook of our sales in overseas market, when we started the year, the growth expectation, economic growth expectation for our economy as well as global economy was significantly higher. You would recall 2-3 quarters back, we were talking about 7.5% plus kind of growth for Indian economy, and about roughly 3.5% kind of growth for global economy. Unfortunately, this continuing geopolitical scenario in Eastern Europe has escalated the energy prices significantly in last 2-3 quarters, and most of the European countries now they are moving power from industrial usage to domestic usage, retail usage, and most of the chemicals and our product alike, these are industrial intermediaries, right? So these are used by businesses, industries to produce their material. It is an intermediate product. Now, if the overall production level, and EU is you understand, it's a large consuming market, right? It is not one country, but it is all the countries in Western Europe. Now, and it accounts for almost, close to 18-19% of global carbon black. Now, with that background, if we see some tapering down of industrial goods demand in Europe, which is visible now, though in a very small manner, but it has started becoming visible. So then that is certainly going to impact the overall demand for carbon black globally, right? Because it's a large consuming market. Now, having said that, it is little early. We don't know how the situation is going to unfold over next few quarters, because the situation is so very volatile. Every few months, even the stance of policymakers are changing, right? Sometimes we are talking about bond sale program, unwinding program, quantitative tightening program, whereas in some of the countries, while they were talking about quantitative tightening, they have started buying bonds. Right? So the situation is evolving, and we are keeping a close look on the situation. But at the same time, I would say that so far in difficult situations, we have been able to sail through and navigate the headwinds very, much better than most of the, other businesses. So we retain that confidence, and we believe that we will have the capability to withstand market challenges. But having said that, market challenges are there.
Okay. And on the domestic demand side?
Domestic demand to auto companies, what we learned from tire and auto companies is, they are looking at decent growth going forward. And on the ground also we are seeing that. However, new capacities are coming up in carbon black space. So it is more of a supply side issue in short term rather than a demand issue in domestic market.
Can you help us with the supplies that is coming in the domestic market apart from ours 150,000 metric tons? What are the other capacities which are coming and when?
See, Epsilon, we all know that, that was commissioned a couple of quarters back, right? So that was an additional supply. BKT has announced capacity addition. So we are not sure about the exact timing of commissioning of their facility. But in next few quarters, it should come. Our facility is almost ready. It should be, ready for production in next couple of months, right? So and then recently, Continental Carbon also commissioned their plant in Gujarat. So if we consider all these facilities, then we are talking about some, more than 500,000 ton capacity, additional capacity in India.
Okay. So basically, BKT is any which way is a backward integration. I don't think they sell in the market. Epsilon, Continental and PCBL. So you are telling between the three, 0.5 million capacity addition, out of which 0.15 million is ours. How much is Epsilon which has added?
Epsilon added roughly 1,15,000 tons.
1,15,000.
And Continental?
Continental has also added 150,000, 1.5 lakh tons.
Okay, 1.5 lakh tons.
Take some time to get test approvals and all those things.
Okay, so
they have another plant at Ghaziabad, but still they require a lot of approval for newer facilities.
no, we couldn't hear you, Chandakji. Can you repeat again?
What I was saying that new facilities are in Gujarat. Their existing plant is in Ghaziabad. So they will require a lot of approvals from customers and that will take some time. But over next couple of months, they will also start supplying little bit of carbon black in Indian market.
Got it.
As far as export is concerned, generally we are quite strong on that. And others, mostly they are selling in domestic market.
Got it. And does this scenario change the Chennai plant capacity utilization rate that we have earlier talked, which is around 18 to 24 months? Does that change the outlook for our Chennai plant capacity utilization?
Not really, Sanjay.
Not really.
Not really. As Mr. Chandak also mentioned in his opening speech that, short term, of course, there are uncertainties and there are challenges, but directionally we believe that it's a long-term growth phase for industry, most of our Indian carbon black industry. So we are hopeful that capacity utilization should not be a problem.
And this also can come over 18 to 24 months what we have been talking about.
Okay. On the specialty side, the first phase in Mundra, 20,000 metric ton, what we are adding by March 23. What are the product line are we targeting with that plant?
Mostly the product range you are inquiring, right, Sanjay?
Yeah, correct.
It will be mostly pertaining to fibers and high-end inks and coating.
So coating, what are the other two things you said?
Coating, fiber,
Okay.
and ink.
Okay, coating, fibers and ink.
Yeah.
Okay. And these will be all new products, right? Or it is the expansion of the existing line?
No, we have some grade for these applications, but from our existing line we can't produce this high level of grade. So like last time also I mentioned that we require specific equipment, different equipment for different kind of grade. So this is expansion of our portfolio in a way. This will help expansion of our portfolio. Product portfolio.
Got it. And how is the China situation, supply situation? Even they are facing demand side issues, and we have seen this happening in the PVC as well. They have a large production, and as soon as the demand slips, they tend to offload those volume in the peripheral market, including in India. Are we seeing any such scenario in the carbon black where China is getting more aggressive as far as the supply market is concerned?
No, so far as their export prices are concerned, these are still higher as compared to our selling price. So they are doing little export to India. The volume is not much. Last month they did some 1,400 tons. If you were to see in the right perspective, they used to do close to 5,000 tons a month about 1.5 years before. Right? So the volume is not much, and the price at which they are exporting to India is quite high. And if you look at the feedstock prices, currently carbon black oil is quoting at around $925, $930. And our feedstock landed basis, it will be less than $600. So the arbitrage, negative arbitrage for them remains actually. Their cost side
Any reasons in this quarter why our sequentially gross profit per kg has come down from 35 odd rupees to 32 odd rupees?
Sanjay, last quarter we mentioned that the market was completely sold out, right? In the spot market, we could make very high margins. But we also mentioned that this is one of kind of a good situation, one of kind of a good quarter. And when we look at a base quarter, we should look at 2022 full year numbers as base, right? And from incrementally, whatever we are doing on efficiency improvement, capacity enhancement, operating leverage, and product yield, etc. I mean, this specialty portfolio and yield, that should give us on an average about 1,000 rupees of incremental EBITDA on an average annually, right? So it should be seen in that perspective. So last quarter should not be considered as base.
One last question before I get back into the queue. On the balance sheet side, the working capital looks like it has jumped significantly on the receivable side particularly. Any particular reason why the receivable has gone up so sharply? I understand the price hike, but that should have compensated with a higher creditor days, but that's not happening.
Sanjay, if you look at the operating cycle or the number of working capital days, as compared to 31st March, we have gone down by 2 days. In absolute terms, the numbers look bigger because there is a significant increase in our top line. As compared to March quarter, our top line has gone up by more than 400 crores, right? And consequently, there is slight increase in inventory and some increase in receivables. Payables has also gone up. Payables has gone up by about 100 odd crores. So net basis operating cycle, we have been able to reduce by 2 days. And as crude prices come down, last quarter when we were selling basis $112 average Brent. But I mean, from that level, crude has come down, by almost, close to $20. So that will reflect in our, working capital requirement going forward. If crude remains at current level, there will be release of working capital in next 2 quarters.
Fair enough. Got it. Thanks, sir, for answering all my questions, and best of luck for the coming quarter.
Thank you, Sanjay.
Thank you.
Thank you. The next question is from the line of Chintan Chheda from Quest Investment Advisors Private Limited. Please go ahead.
Yeah, thank you. So my first question is related to gross margins. So this time we had seen some 2,600 quarter-on-quarter decline in gross margins. And as you said, the raw material, the crude itself is very volatile. So have we experienced any inventory loss during the quarter?
No. Again, you'll have to see it in the light of, what our gross margins were historically, how it has, changed over last 2 years. What was our gross margin per ton last year? What was our gross margin per ton in the March quarter? And then in that slide, if you see the current quarter's number, sequentially, of course, it is down by 2,500 rupees. But as I, just mentioned that last quarter was one of exceptional quarters, right? We could make very high margins in spot market, but that should not be considered as base. But just to give you another perspective, the margin per ton that we make that we made in second quarter is second highest margins in our history per ton. We have never before made this kind of margin. So, but when you look at it from last quarter perspective, of course, it will look lower.
Okay, got that. And secondly, sir, when I look at our specialty volume for first half, so for the first half of this year, we have barely reached at around 20,000 tons. And our guidance was on last year's 35,000 volume, we were reaching at incremental 10,000 tons. So in second half, are we confident of, reaching to that number of around 45,000 tons in specialty?
Well, Chintan, when we gave the guidance, of course, the economic scenario was different. But having said that, even if we were to split this full year volume into, say, 2 halves, then logically we should have done about 22,500 tons. We are very close to that. And if you have noticed, every quarter our volumes are increasing, right? So second quarter volumes are a little higher than the previous quarter, and first quarter volumes were higher than the March quarter. So considering that, we are still on track, and we are hopeful that we should be able to deliver the volume for which we are given the guidance.
Okay, great. That's it from my side. Thank you for the answers and happy Diwali to the team.
Thank you, Chintan. Happy Diwali to you.
Thank you. We have Aditya Khetan again in the queue from Smiths Limited. Kindly proceed.
Yeah, thank you, sir, for the opportunity. Sir, my first question is onto the supply side. As you have mentioned that roughly around 5 lakh ton capacity is set to enter the market. So, any timeline you can give, sir, so when these capacities would be fully absorbed by the market, so considering a 2 to 3 years time frame?
Aditya, when we were planning this expansion, this greenfield expansion, 2-3 years back, even then we had planned it based on expansion of our own market size. And therefore, last 3-4 years, we had been focusing a lot on creating a stronger base in overseas market. So we have set up our own offices, our decanting stations, warehouses. We have tied up with supply chain partners. And the whole idea was that when we add capacity, we should not be dependent on any single market. So, and see, last 2-3 years, we have been, communicating to the market that India appears to be a good place for expansion of carbon black industry. And because the opportunity is big, we will see capacity expansion by other players also. So this was all expected. There's nothing which was not known to anyone of us. So we, in that background, we are confident that we should be able to utilize the capacity, our capacity, despite all the new capacity addition by other players. So, next 2 years, we should be looking at next phase of expansion. That's how we see it.
Okay. So the 1.5 lakh tons, so can you assume so by FY25 we would be able to consume it full by FY24?
Should be. That will be the endeavor of the company. Of course, you will understand, whatever we say, despite that economic scenario and geopolitical scenario, both are very rapidly changing. It's an evolving scenario, right? So, as this situation, we still feel confident that we should be able to utilize the capacities in 2 years' time.
Okay. And sir, how the competitive intensity scenario would change like for the next 2 years? Because as of now, what in this quarter number, so the average realization for carbon black is around 140 rupees per kilo. So this looks like a majorly a pass on of the increasing raw material price. So now considering new capacities are also coming in and the crude prices have also started to decline. So where do you think competitive intensity that would increase, so that could give so our realization would start to decrease. So how should we see for the next 2 years into this context?
We will not look at India in isolation. So when we look at the global scenario in our industry, the consolidation which has happened and which is happening in China, it is much larger than the capacity addition which we are seeing now in India. So from that perspective, we don't see a challenge from supply side. Too much supply coming in the market. We believe that the space vacated by China is too big to accommodate everyone. On the other hand, once this current uncertainties and volatility settles down, we see a robust growth in Indian tire and auto industry, and we are therefore hopeful that going forward, long-term perspective of the industry looks good.
Okay. Sir, onto the China side, so now there is a fresh cases of COVID which has been resurging now into China, and some of the ports have actually shut down the business. So are you witnessing any slowdown in imports from China and that would benefit the domestic industry, at least for the short term, but you have given a guidance so for a bleak outlook for the short term. So I would like to know on this, sir.
So we are not giving a weak outlook for the short term. what Mr. Chandak mentioned was that there is opaqueness around what is going to happen in next 2-3 quarters, and that is because of very high level of uncertainty around geopolitical and geoeconomical situation. He did not say that our performance would be bad. I mean, it might be better for all we know, right? So we are only talking about the uncertainty level, which is very heightened currently. But long-term outlook of the industry looks pretty encouraging. I mean, we are very hopeful that in India, carbon black industry would grow possibly multifold in next decade, right? And all participants of the industry feel it.
Okay. Sir, into your initial remarks, you have stated, so onto the European capacity, so that figure you have mentioned, that is 18 to 19% of the global capacity, which is into Europe right now?
Yeah. So Europe, Western Europe accounts for about 18-19% of consumption in our industry. But of course, I mean, it is not going to become zero. Auto sales might get impacted there for a while, as long as, energy crisis persists. But sooner or later, that is also going to end now. So all we are talking about is that maybe there would be some volatility where we'll have to do some juggling with our supply chain. Maybe we'll have to move materials from one market to another, sell more in some markets, sell less in other markets. So that combination possibly will have to continue to do in this next few quarters. But it is not going to be absolute destruction of demand. Maybe it will be temporary some impact on the consumption side, and which certainly will impact the industry. I'm not saying that is not going to impact the industry. So one part is the impact on industry, which is going to be there, and second is our own capability to navigate through this situation. So what happens when there is a strong headwind? In last few years, despite all the headwinds, we have been able to navigate well. So that gives us confidence, on our path forward.
Okay. And sir, what would be our percentage of exports which we are supplying to Europe?
Currently, it is not much. Out of total exports that we do, about 15-16% is to Europe, but that is on an increasing trend. So Europe was majorly buying from China and Russia, and now with issues with Russia on the geopolitical side and changing trade relations with China, cost structure has also changed. So with that, Europe is importing more from India. So that remains a potentially big importer, for our industry, European market, going forward.
Okay. Okay, sir. Thank you, sir. That's all.
Thank you.
Thank you. The next question is from the line of Sailesh Raja from B&K Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. Congrats for the good performance. So this Thailand tire market is very similar to India, since I am assuming that carbon black market size to be around 6 to 7 lakhs maybe per annum in Thailand. So how much volumes currently we are catering to Thailand, and what is our market share?
In Thailand?
Yes, sir.
We are not doing much business in Thailand because Thailand is self-sufficient in their requirements. Yeah, our sales in neighboring countries like Indonesia, Malaysia, Vietnam, there we are selling more. But in Thailand, we don't do significant volume.
Okay. So in overseas market, can you give us the volume mix between the Asia? You mentioned about Europe, it is 15%. Can you please share how much it is in Asia and US in the first half?
Yeah, in terms of percentage, currently we are doing about roughly about 77-78% in Asia. Around 15-16% in Europe, Western Europe, around 3-4% in North America, and rest is in Middle East and Australia and other countries.
Okay. So in specialty, we have done 20K volumes in first half. In that, how much is exports?
About 70% is export.
Okay. So how many new grades we are planning to launch, sir, in this current year and next year? And currently, what is the user industry mix between the plastics, inks, paint, coating, and with the new Mundra line, how the mix will change?
If you look at the specialty landscape from the industry perspective, almost 65% gets consumed in polymer application, which is plastic application. Roughly about 15-20% goes into ink, paint, dye. Then about 35% gets into conductive application, and balance is multiple applications like adhesives, fertilizers, cement, and many more fibers and all. So in our portfolio also, decent chunk will pertain to plastic application. I mean, if you look at the from the portfolio perspective, right? The new grade which we are developing is largely in ink, paint, coating, fibers, but that will still remain. I mean, from overall volume perspective, that will still not be, because while we will be producing those grades, the utilization of line will take a while. We already have some capacity cushion on specialty side, and this additional facility, initially the volumes will not be like full utilization of the line. So from that perspective, it will not change the portfolio percentage, significantly. So maybe our ink, dye or fiber portfolio will go up, slightly, and maybe polymer portfolio in percentage terms might come down by 2-3%, but it will be a gradual, change in the color of our portfolio over the next few years. Now, you also asked, what was your first question, Talis?
No, exports you have answered, sir. That how much is exports I have asked. In 20K volumes in first half, in specialty, how much exports we have done?
No, so you also asked about how many grades you are going to launch.
How many grades? Yes. We are planning to launch in the current year and next year.
So last 2 years we have been, launching some 7-8 new grades every year, and we believe that this year, that pace should increase a little bit. So maybe between 10-12 grades. 10 to 12 grades this year.
Okay, great, sir. Sir, there was a huge drop in performance carbon black volumes over last year, same quarter. So what was the reason?
So there are different customers, right, in India and outside India. And if you notice, our export volume in this quarter has gone up. So we are moving volumes from one country to another, right? Then the end application also changes, because the customer may not have a similar requirement, right? So we have to utilize our lines more for rubber application in this time, right? So again, like I said, that market is extremely uncertain, and therefore we have to be very agile with the market conditions, very closely, and accordingly, respond to market. So in next few quarters, possibly you will see this switch between quarters, sometime more performance, sometime more higher grades. But the whole, from company's perspective, we would want to utilize our capacity to the fullest, right? And with that perspective, wherever we see opportunity, we utilize that.
Okay. Sir, one last question. Sir, after this Chennai and the Mundra expansion, so what is our capital allocation policy?
Capital allocation policy, there would not be much change, Talis. If you are talking about payouts, my sense is that the board is going to maintain that, right? We believe that we will be generating decent cash going forward. So, we can fund our expansion and also afford to maintain the payouts. So there would not be much change in our, capital allocation policy.
Okay, sir. Yeah. Thank you, sir.
Thank you. The next question is from the line of Dhiral from Phillip Capital India Private Limited. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. Sir, in terms of on the supply side, particularly on the Europe, are we getting any advantage as Europe plus one?
We certainly, we are all reading the reports. You must have also read that the overall trade volume with Europe has increased in last few quarters, and we are also benefiting from that. Of course, there are a lot of customers who are sending us their orders, their queries, right? So the activity between India and Europe in our industry has gone up, and we are surely going to benefit from that.
Sir, in terms of supply, how much they contribute to the overall carbon black market?
They consume about close to about 2 million tons is what they consume.
Okay. And sir, how much they export?
No, Western Europe is net importer, really. Last 7-8 years they have not invested in capacity, so they are net importers. Earlier they used to import more from Eastern Europe and China, and now they are focusing more on Asian countries.
Okay, got your point, sir. And sir, on the YOY basis, sir, we are seeing a rise in the employee cost.
Yeah. So last 2-3 years, because of COVID, we were little constrained in terms of increments and bonuses and all. So therefore, the cost in 2020, 21, 22, it was a little lower. That is one. Number two, we are expanding. Right, we are adding capacity, both greenfield and brownfield, and we require more manpower in our facilities. Also, our R&D bandwidth we are improving, so we are hiring more people, both in our Indian R&D center as well in the Belgium R&D center. So with that, of course, there would be upward movement in manpower cost.
Okay. And sir, as you stated earlier that we are targeting 1,000 rupees EBITDA per ton improvement year after year. So that will continue even for next few years?
Yes, I like I said that last 4-5 years, if you look at the trend, that's how we have been able to perform, right? And going forward also, we are optimistic. We should be able to continue to perform that way. Of course, it is not that every year there will be, that much incremental contribution or EBITDA improvement. Some years it may be more, some years it may be a little less. Right. Yeah, but from a 5-year direction, if you see, we feel that we should be able to add, 4,000 to 5,000 rupees kind of additional contribution.
Okay. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Bharat Seth from Quest Investment Advisors Private Limited. Please go ahead.
Hi, good evening, Raj and Chandraji, and I wish you a very happy New Year. Hello.
Good evening, sir. Good evening.
Yeah. So I just want to get some sense. In Europe, we are seeing several challenges, I understand. But what about our other export market, like South Asia and America? And earlier year, we had a logistic cost big issue, which is now coming down and realistically normalizing. So is there any further scope to increase our export to North America? So if you can give little more color on that.
Certainly, there is like I mentioned, Europe, it appears to be a big opportunity from mid to long-term perspective. North America also is an opportunity, but North America is a very distant country. When we talk about Mexico or USA, right, the logistics cost is prohibitive, right? And in all situations, I'm not saying that currently the freight rates are higher and therefore all along, their freight rates have been about 5-6x of the freight rates applicable to Asian countries. Right, so North America from that perspective, it will always remain, we normally do more of high value grades there. We don't do normal grades because it impacts our margin. So from that perspective, North America possibly will remain a specialty market for us, not so much so the conventional grade. Europe is a big possibility, I said. And to answer your question on the logistics cost side, yes, logistics costs have come down from their peak. As At their peak, they were almost 6x of their pre-COVID level. From that level, they have come down by almost 50%. But even now, they are about 3x compared to the pre-COVID level. So they are still elevated. But because we negotiated our contracts at a higher rate beginning of the year, so in these quarters, our actual freight outflow is much less than what we built into our contract. And consequently, they are supporting our margins, providing support to our margins. And in the current quarter, the performance that you see, it is also partially because of higher contribution from the freight side. So we have to pay less freight. Right? And next 2 quarters also, if freight rate doesn't move up, currently these are coming down. So this should further, provide support to our margins. So again, Bharatji, I mean, if you look at different sides, so there is a demand slowdown globally, right? In India, there is surplus capacity. Yet, I mean, this quarter, our numbers are far better than other quarters. Don't look at only last quarter, but if you compare it with any other quarter in our history, the numbers are very good. Why? Because there is also some upside from these factors like, containerized freight and all. So sum total of all is that, I mean, the performance has been decent during the quarter.
And Raj, how about the outlook on the Southeast Asia market and Middle East market?
We are not seeing much impact on Asian markets. Asian economies still relatively look better. When we talk about our major consuming markets like Vietnam or Indonesia, Malaysia, most of these countries look stable, like India. Right? So from that perspective, we are not much bogged down or overwhelmed but like I said, that Europe, North America, these are large economies, and eventually they impact global macroeconomic situation. So how that is going to impact our industry is yet to be seen. But remain what?
2 questions. So is there any impact on this Europe export to Europe because of depreciation of euro vis-a-vis Indian rupee? Any impact on our realization?
No, we normally whatever contracts we do for overseas sales, we hedge them as part of our policy on day one. So therefore, there is no impact of currency fluctuation on our market.
Okay. And last question on normally we were saying when crude price was increasing that with our OEM supplier and the pass on of the hike in the input price is quarterly basis. So now in this since Q2 price has been later on, I mean from September and declining, but will be still it was much higher. So and now it is gone down. So we'll be able to realize able to take some price increase on QOQ.
The price is not an indicator of our profitability. So whether price goes up or down, that doesn't impact our certain margin. And a lower price scenario actually is good for us because it helps us release working capital, and also it is good for our customers because they make more margin. So a lower price scenario is better.
And last question on the segmental performance, QOQ, I mean, there is an increase in the unallocable expenses. So any specific reason?
No, so we have 2 segments, power and carbon black. And sometimes the expenses are common. And therefore, it is unallocable. But that is only a reporting perspective. Actually, whatever expenses we incur, these are all business expenses. So wherever we allocate it, ultimately it remains business expenditure, Bharatji.
Okay, thank you and all the best.
Thank you. The next question is from the line of Shashank Kanodia from ICICI Securities Limited. Please go ahead.
Yeah, good evening, sir, and thanks for the opportunity. So just wanted to get a sense, what are the prevailing prices of carbon black domestically?
Last quarter it was around 140,000 rupees per ton, Shashank. I'm talking about average. And this quarter it is going to drop by roughly about 10,000 rupees a ton. So around say 130.
Okay. And secondly, sir, in the quarter 2, were there any spot benefits as well? So is this 16,400 or 16,500 the base number that we should be working for the EBITDA pattern for PCBA?
I did not understand your question. You're saying that last quarter's number should be considered as base?
No. So this is, I wanted to check. So in Q1, we had some spot benefits, right? Because of which we had a record high EBITDA pattern. So for this quarter also, were there any spot benefits, or this is going to be a normalized base for us now, 16,400 or 16,500 as EBITDA pattern?
No, Shashank. Actually, see, what is happening, freight rates are coming down. When we signed our contract beginning of the year, we signed at a very high freight rate, right? So our realization remains higher, and we are having to pay lower freight to shippers, right? So that is increasing our margin, but that is not normal base. Because again, end of this year, this calendar year, again we will sign new contracts, and which will be based on the new freight rate. So therefore, every time I am saying that we should look at our last year's full year performance, and that we should consider as our base, normal base.
Right. So then 14,400 incrementally 1,000 rupees. So 15,400 or 15,500 is a sustainable run rate as on date, right?
Correct. So in some years we might make more than that. In some other years there would be maybe some dip, right? So for all we know, this year may be a little higher, than 1,000 rupees. But then, that should not be considered as base. So somewhere then we will start building unrealistic expectations.
Right. And so given the macro uncertainty as well as some supply side issues domestically, so can we expect a single-digit overall volume growth for PCBL this year, something like 44.75 lakh odd tons?
A single-digit growth may be there. Again, it would depend on how next few months the market situation turns out to be. Honestly speaking, volume growth, actually next year onwards we will be able to deliver better, because then we will have capacities available, and we expect the market also to improve from the current scenario. So this year top line numbers, of course, are higher because of higher crude. Possibly bottom line numbers will also be better compared to last year because of higher margins and the spot opportunities and different opportunities. But volume, I think, mostly would come from next year, volume expansion.
Okay. And sir, lastly on the payout, so we intend to maintain this 40% payout ratio, right?
Well, actually, it's a board level decision, Shashank, you will appreciate. So, my understanding is that we have been maintaining that, around 35-40% kind of a payout. So in all likelihood, that should be what the one. But again, it's a board issue, so they will decide.
Right, sir. Thank you so much, sir. Wish you all the best.
Thank you, Shashank.
Thank you. The next question is from the line of Radha from B&K Securities Limited. Please go ahead.
Hello, sir. Good evening. Thank you for the opportunity. So, sir, I wanted to understand, since you have achieved the highest realization per ton this quarter, so how do we understand this? What is the reasons behind this other than growth in specialty volume? What are the other reasons behind it?
Sorry, I did not understand your question properly. Would you please repeat?
Yes, sir. So we have achieved the highest realization per ton this quarter, and I believe one of the reasons is that we have achieved 10,000 volumes in specialty. So one of the reasons is growth in specialty. So what could be the other reasons for such growth in realization per ton?
So realization primarily is a reflection of change in crude prices. Normally, Radha, we operate with a 1 quarter lag pricing formula. So in last quarter, when we did the pricing, it was based on average Brent rate of $112. Right, our raw material prices are linked with Brent. Right, and last quarter when we did the pricing, it was based on an average Brent price of $112 per barrel. Right, so consequently our realization also went up. Specialty did contribute, small, part to overall realization. But specialty volumes even in the previous quarter was almost similar, maybe 200 tons less. Right, so that has not been the major factor in realization. But like I keep mentioning, realization is not an indicator of our profitability. Realization might move up and down based on the crude level, but our margins are more, dependent on operating leverage, our own product portfolio, and our own internal efficiency.
Understood, sir. And similarly, sir, could you explain the reason for raw material cost per ton as well? How do we look at it?
Raw material is linked to oil, crude oil, Brent.
Yes, and that would be how many quarters lag?
It's 1 quarter lag.
Understood, sir. Also, sir, on a QOQ basis, we have seen that there is a reduction in other expense. So, on absolute value I'm talking about. So, what could be the reason for this other than freight? Any other reason?
Yeah, so in quarter one, we carried out some major maintenance activities, which of course we did not have to carry out every quarter. So therefore, there was some saving in expenses, and then freight also contributed big way.
Understood, sir. Yeah, I'll come back in the queue.
Thank you. The next question is from the line of Peter from KSEMA Wealth Management. Please go ahead.
Hello, sir. Good afternoon. Sir, first question is in terms of clarity. You had mentioned about the split of Asia 78, Europe 15, North America 3. Was that for our revenue or volume?
So more or less, the selling price is more or less same. We sell on a landed price. So more or less, it is similar realization most of the geographies except the freight part. So volume and value share will be similar.
Okay. And sir, just to understand export more, other than India is domestically strong, Europe you had mentioned. So other Asian markets, which would be the other top 3 major revenue contributors from Asian market?
So we are very strong in Vietnam, account for some close to 13-14% of their overall market size. We do decent volume in Malaysia and Indonesia. There is good sales in even Japan for us. We sell to almost all countries. So even Thailand we do some volume, but it is not significant because they have their own supplies.
So we see that you are exporting to over 45 countries. So we are just trying to understand in Asia, which are the major ones and what is the outlook in them. So accordingly we can, any major markets in Asia you feel that demand is looking weak for the next 2 quarters or next year?
For our market, there is no such single large country which creates a concern for us. In Asia, what we understand, China possibly would have a lower growth going forward, but that's not a market for us. India mostly imports from China. It used to import from China. And whatever volumes we are doing in China, it is mostly on specialty side, which is a niche market and where the impact of economic condition on demand is much less. So as such, we are not much concerned about volumes in Asia. The worry that we have is mostly on Western Europe side. And that is mid-term, we believe.
Sir, but you had mentioned that since Europe used to buy from Russia and China and now they are exporting from other countries including India. So PCBL has also benefited from that same trend, right?
Right.
So this benefit for outlook for how long do we expect to have, or should we expect it to be?
It is from long-term perspective, it is a structural change, Peter.
Okay.
Right. Russia currently, there are a lot of sanction on it, and it is unlikely that even when this war ends, sanction would go away immediately, right? It is unlikely. China, they are reducing their capacity, right? So again, that is structural. So someone will have to make up for these volumes, right? And India appears to have capacity, capability, supply chain, logistics, and good relations, and cost structure advantages, and good relations with European Union. So from that perspective, long-term basis, it looks to be pretty encouraging.
And sir, that some of the other global counterparts have made, as very recent as even 3 months back, some acquisitions in other countries, including China, Thailand, for that matter. So why is that not being considered by PCBL for market expansion?
We are not averse to inorganic growth, but then we will only consider that if the portfolio is right. Which gives us a kind of leap in our technical capabilities, and the valuation is correct. Just for the sake of copying others, we will not do it. And we believe that in India, the opportunity for organic growth is very large. It's a multi-year growth opportunity. And we believe that in this scenario, in the current scenario, dividing our bandwidth, manufacturing bandwidth into multiple countries may not be very useful. So we consider India as a market for our organic manufacturing capacity growth, and acquisition, if it happens, mostly it would happen in high-end value-added products, if at all. There's nothing in pipeline though. There's nothing available.
And sir, what do you expect the realizations to increase this fiscal year compared to last year by?
Last year, if I were to consider maybe on a similar kind of a volume base, last year we did about roughly 4,500 crores and kind of a turnover. Right? And this year, already in the first half, we have clocked 3,000 crores. My belief is that if crude remains where it is, possibly in next 2 quarters, we will clock another 2,800 crores. Right? So, with that, roughly, if we are around, say, 5,800 crore of turnover with say 4.6 lakh tons of volume. So average realization will be around 1,25,000-1,26,000 rupees.
Okay. And sir, my final question is that some of the international players are reporting that because of the EV battery, they see a new demand for carbon black in EV battery. So is that something relevant to Indian companies? And part 2 is that there is also a trend of some Orient engineering companies stating things like they are trying to go for natural carbon black by renewable sources. So is that something that can impact the market in the near term, and the views of PCBL on the same? Thank you.
The EV battery grade carbon black is a big opportunity, and our research and development teams are working on that already, right? And maybe it will be a few quarters and we will also come out with some solution in that space. So that's the next big opportunity in carbon black space. Speaking about natural carbon black, when they talk about natural carbon black, they are talking about, extracting carbon black from vegetation like trees and plants and all, which is not scalable, right? So maybe, from ESG perspective, a very small portion, capacity can be developed in that space. But what we are working on is a futuristic technology to create carbon black, which will be more green as compared to the current processes. Again, currently that is under R&D for us, but that will be based on cracking off some gases using plasma technology. And we will extract carbon and hydrogen out of those gases. So in the process, we will not create any kind of emission or very low level of emission. These are all futuristic technology. The teams are working on that, but like I said, that is a subject matter of R&D, and it will be some time before there is some success.
Okay, sir, you are very kind. Thank you, and best wishes for the next quarter, sir.
Thank you.
Thank you. Ladies and gentlemen, this would be the last question for today, which is from the line of Aditya Khetan from Smiths Limited. Please go ahead.
Yeah, thank you, sir, for the follow-up. Sir, my question was on to the raw material side. Sir, so we are almost importing roughly around 90 to 95% of the raw materials from China. And sir, we had witnessed that some trend into the yuan, which is the currency of China and India, that in Indian currency for the last 4 to 5 months have shown strong, like so the rupee has been quite strong against the yuan. So that is this trend has helped on the imports front, and that is also reflected into other expenses also, which has declined by 7% on quarter. So can you highlight on this, sir?
Aditya, we import our raw material from outside, but we don't import from China. There is no import of raw material from China. Most of our imports are from US. Our imports are all dollar denominated and from US. So yuan and rupee equation doesn't impact our business in any way.
Okay. So onto this side, so have you witnessed any sort of impact because the rupee has depreciated sharply against the dollar? So have you taken some impact, or it is completely hedged?
No, we hedge actually. So as such, there is no impact on our business. But what happens, when raw material prices are high and rupee is also depreciating, somewhere it creates a cost pressure on everyone in the entire supply chain. So it impacts our working capital requirement in a way. So it is not good, but nevertheless, on the exchange side, currency loss side, there is no loss. We have a fully hedged policy against all our exposure. And we just take plain vanilla forward cover. We don't even do derivatives. So there is no mark-to-market risk for the company because of currency.
So this 7% decline into other expenses, as you mentioned, so this is primarily because of the declining freight only? Because I believe so, 3 months back, the freight prices were on an upward trend only. So what was the actual benefit like which has gone into other expenses?
No, so freights have come down. From their peak 3-4 quarters back, they have come down almost by 50%, and that has reduced our outward freight, which forms part of our other expenses. So that's one, and other expenses are also down because there is some saving in repairs and maintenance expenses.
Okay. So just one last question, sir. If we look at the realization of carton bag, hypothetically considering if the prices are 140 rupees per kilo, so what would be the consecutive prices for specialty grade carton bag? So would it be around 2 times of the normal grade carton bag, or what should we take as a number? Just hypothetically wanted to know about.
Okay, so I'll give you a number, but before that, the perspective is whereas the regular carton bag prices change immediately with change in raw material cost, there is a longer gap between change in raw material cost and change in realization for specialty grade. Right now, so therefore, when you compare the prices of regular carton bag and specialty carton bag for the same quarter, it may not give you a clear picture. But over a longer period of time, the price difference between the two, the realization difference between the two is around 20%.
It's around 2 times, you said, right?
20% higher.
Okay.
20% higher.
And the raw materials would be similar to make the specialty grade carbon bag which we are making for the normal grade, so the spreads would be higher into the specialty. So this is the concept.
Specialty grade raw material is also different, and it is little pricey. It is highly priced than the regular feedstock.
Okay, so we are using some sort of different grade of carbon black feedstock for specialty, or?
Yeah, we use different kind of oils for specialty manufacturing.
Okay. Got it, sir. Thank you, sir.
Thank you. Ladies and gentlemen, as that was the last question for today, with that we conclude today's conference call. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.